Howdy, Jacob here. Today we're looking at Global Ship Lease, ticker symbol GSL, company 67 in our stock, dividend stock screener. We're making some damage here. So, first things first, 8% dividend yield. Definitely pretty grand there. $656 million market cap, $1.2 billion enterprise value. So, almost double on the net debt or for enterprise value. So their net debt is almost as big as their market cap. However, PE 2.1, price to book zero point 0.6. Initial reaction, very cheap, but we know that the present value of free cash flow evaluates the company what it's worth. And so um, right now, we don't truly know if it's cheap, but as of those two metrics, boom, it looks pretty great. But if you look at the last 2 years, you see that their earnings per share was 4.6 and 7.62, whereas the previous 7 years or so, $1.48 at the highest and negative $12.89 on the lowest. Let's look at balance sheet because we saw quite a bit of debt. So 745 million on the long-term debt and good free cash flow again. The last moving 12 months in 2022 looks like still, if you take an average here, maybe 70. I mean, you have 300 over here, but then you have negative and then 70 million and then 3 million, 48 million. So probably paying out 70 million on average, but just a lot of change in capital expenditures. I mean, you have 3 million, 58 million, 101 million, 7 million, 5 million, no million, 90 million, upwards of 470 million in 2021. So interesting to see that. I know I just did a deeper dive on a company and noticed that some companies, especially or not especially, but some foreign companies include capital or acquisitions in their property, plant, equipment. So that's what could be happening here. But anyways, I think we can start to set some assumptions here. First thing on the dividend side, since they're paying out 63 million, I might say they cut that in half to roughly 30 million, and then I'm pretty comfortable even with the volatility they'll be able to afford that. Um, they have 4 times that on cash on hand, and then 745 million in debt. That's honestly fairly reasonable. So let's assume they just cut it in half and then stick with that as their dividend. Still 4% yield, not bad at all. As for margins, I'm going to bump it down a little bit from the most recent 2 years. Let's say 15%, 20% share change. They've been increasing shares quite a bit. Wonder why they've been doing that. Issue shares. All right. Well, that's an interesting number. Let's do 5%. I don't know what exactly to put there. It's been so volatile, which is a weird measurement. Or share change is usually not so crazy, but um, I mean, they've increased so fast so recently. I feel like I want to put negative growth, but just to be safe, I'll just put 0% growth and 10 on the P, price to free cash flow. And even with all that said, it's still not quite looking like it's giving us a 15% return at these prices. It'd have to fall 39% from where it is at to give us a 15% yield with these assumptions. Um, I mean, are these good assumptions? I have absolutely no idea. I feel like this is one of those companies I definitely have to do some deeper dives on to see if this is actually realistic or not. But I think it does yield an interesting dividend to where I might want to look at it when it gets to a price with these assumptions that looks attractive. But as I say on most videos, when it's this far off, I'm just sitting back and waiting. So thank you and have a good rest of your day.